Welcome to The Explainer. Today, we're looking at a traditional global giant through a totally different lens. For decades, the story around Saudi Aramco has literally just been about oil. But that narrative? It's shifting, and it's shifting fast. We're going to explore how Aramco is quietly but aggressively positioning itself as the unexpected physical engine of the whole artificial intelligence era. And we'll be digging into what their massive Q1 results, and specifically the heavy market chatter around their forecasted Q2 performance, tell us about the speed of this transition. So buckle up, because this isn't just an energy store anymore, it's the foundation of our digital future.
Okay, let's dive straight into this. $32.5 billion. That is Saudi Aramco's net profit for just the first quarter of 2026. In a single quarter, they're generating the kind of sheer profit that most Fortune 500 companies would be absolutely thrilled to see over an entire decade. This pure profit is essentially setting the stage for a massive tech transformation. And when we look closely at the market commentary and those highly anticipated Q2 forecasts, well, this financial momentum shows literally no signs of slowing down. Analysts are expecting Q2 to really solidify this incredible capital generation, giving them the ultimate war chest to just completely reshape global infrastructure.
To really put that into perspective, going from late 2025 to early 2026 reveals the true scale of this financial fortress. The fourth quarter of 2025 sat at a very healthy $17.7 billion, right? But Q1 2026 nearly doubled that number. Insane. And more importantly, the market forecasts for Q2 suggest this upward trajectory isn't just a blip, it's stabilizing at these historic highs. Those Q2 projections are becoming a massive focal point for analysts right now, because they prove this is a sustained trend. Even with all the global volatility, inflation fears, and just general economic uncertainty out there, Aramco isn't just weathering the storm. Based on upcoming Q2 projections, they are thriving in it, generating reliable, massive capital quarter after quarter.
So, the absolute crucial point here is how they manage and actually deploy all this capital. They're sitting on a $75.2 billion cash position. Meanwhile, their gearing ratio, which is basically a fancy way of measuring their debt compared to their equity, is at an industry-low 4.8%. That exceptionally low debt gives them massive borrowing leverage if they ever needed it, which honestly, they currently don't. Add in a $21.9 billion base dividend and $18.6 billion in free cash flow, and you have operations that are virtually unbeatable. This immense financial power, completely backed by those incredibly strong Q2 profit projections, gives them the unique ability to fund a high-tech transformation without ever over-leveraging their core business.
Which brings us to the big million-dollar question. What actually powers the global AI boom? When we think of artificial intelligence, our minds immediately go straight to the software, right? Complex algorithms, machine learning models, and big tech companies out in Silicon Valley. But the reality of AI is actually incredibly physical. Hyperscale data centers have immense unyielding energy demands. We're talking thousands of megawatts of continuous cooling and processing power 24 hours a day, 7 days a week. The servers never sleep. So who has the global capacity, the infrastructure, and the immense capital to guarantee that kind of flawless, baseline energy grid reliability?
And this brilliantly illustrates a massive paradigm shift happening right under our noses. The traditional view paints Aramco purely as a legacy oil giant. Actually, scratch that, a lot of people think of them only as an oil company. But the reality of their business model is rapidly shifting toward becoming critical infrastructure for AI. The tech world is finally starting to realize that you simply cannot have a digital AI boom without a robust, incredibly reliable physical energy backbone. The smartest algorithms in the world are totally useless without the watts to run them. Aramco is quietly positioning itself as that invisible, absolutely necessary backbone keeping global neural networks and hyperscale computing centers online. But here's the kicker. They aren't just generating the power for other people's AI. They're aggressively digitizing their own internal operations. By the end of 2025, they identified 442 distinct AI use cases across their business, and they've already successfully implemented over 200 of them. In 2024 alone, this tech integration yielded $1.8 billion in what they called tech realized value. To put that simply, AI directly improved their production efficiency, streamlined their logistics, and slashed operational waste, saving them nearly $2 billion. They are using smart infrastructure upgrades and AI forecasting to optimize output while simultaneously working to lower their carbon footprint.
Moving into our next section, tech-driven green transition, funding the future.
Let's see how this all builds into the specific high-tech steps Aramco is taking. They're leveraging that massive free cash flow and again those highly anticipated Q2 profits to fund an incredibly ambitious sustainability plan. Step 1.
They're investing heavily in carbon capture, utilization, and storage to hit a 15% reduction in carbon intensity by 2026. Step 2. They're aggressively funding the development of blue hydrogen as a viable, clean energy source to power heavy industry. And Step 3. They're deploying advanced, AI-driven geological analysis to locate and secure the critical transition minerals needed for green tech. They are literally using artificial intelligence to mine the physical materials required for a decarbonized future. It's a total game changer.
Now, what's absolutely fascinating here is how this aggressive pivot is quantified by a very specific goal. They are actively targeting a 50% renewable energy share in their portfolio by the year 2026. Half of their portfolio from renewables, half from other sources. For a legacy energy producer of this massive scale, this is a monumental, rapid shift. And it's a shift fueled directly by their financial stability. Those strong Q2 forecasts we discussed earlier, that's precisely what gives markets the confidence that Aramco can actually scale these green technologies at a pace few other companies on Earth could even dream of. Which brings us to our final key section, bulletproof operational resilience, or what I like to call the energy stabilizer. Of course, grand technological ambitions and green targets mean absolutely nothing without physical stability. In a world full of unpredictable supply chain disruptions and geopolitical shocks, Aramco acts as the ultimate global shock absorber. They have the maximum capacity to pump 7 million barrels per day through their east-west pipeline alone. That's enough to keep entire economies afloat. This isn't just an impressive piece of modern engineering, it's a critical artery for uninterrupted global energy security. Because look, when data centers demand absolute 24/7 uptime and the global economy requires certainty, the physical energy supply literally cannot stutter. Aramco has built the physical infrastructure to ensure it simply doesn't.
And that massive pipeline capacity ties directly into a genius risk management strategy. By heavily diversifying their export routes, specifically by building the capacity to completely bypass major geopolitical choke points like the Strait of Hormuz, they can guarantee continuous power and export flow regardless of regional tensions. They utilize incredibly complex contingency planning and AI-backed logistics to ensure that no matter what happens politically or environmentally, the energy just keeps flowing. This absolute reliability is exactly what hyperscale tech companies are looking for when they map out the long-term viability of their own massive data center expansions.
Bringing all these threads together, we arrive at a powerful summary from the source material. Aramco is transforming into an AI-driven energy powerhouse. They aren't just passively adapting to the global energy transition, they're actively technologizing it. They use advanced artificial intelligence to make their operations cleaner, more efficient, and yes, a whole lot more profitable. In turn, they take those enormous profits, which are projected to remain incredibly strong through Q2 and well beyond, to fund and stabilize the reliable global energy grid that the AI boom so desperately requires to function. It's really a perfect, self-sustaining loop of physical energy and digital intelligence.
Which leaves us with a pretty provocative question to think about. As AI's energy appetite continues to grow exponentially, who truly holds the keys to the digital future? Is it just the software developers and algorithm creators out in Silicon Valley, or is it actually the legacy energy giants who have the capital and the infrastructure to guarantee the massive physical power required to run those algorithms? It's a fundamental shift in how we view the intersection of energy and technology. Thank you for joining this explainer.